Good morning, it's the 3rd of December. I am Joe Neighbour from Signal Centre, and today I'll be running through some charts on the FX markets just to give you a fresh update on what we're seeing from a technical perspective and where we believe price could head in some of the major currencies. So first up, in terms of latest news, the volatility in the markets appears to have eased over the last couple of days, although there is still a high degree of uncertainty in the markets as a result of the Omicron variant. Yesterday, we saw Fed officials continue to back the case for a faster tapering of bond purchases. That will have an impact on some of the FX markets for sure. In terms of what's expected today, we've got the non-farm payroll number out at 1:30 in the US. Obviously, a very widely watched number, and typically quite a high impact on the market as well. So we'll be keeping an eye on that. And as a result of price action up until that 130 point, we could see some quite muted price action as traders begin to position themselves ahead of that number and of course ahead of the weekend. So let's get stuck in. This is the dollar index chart on the screen first of all. This is always my starting point when it comes to analysing FX markets. I have been bullish of the dollar index for some time now. And overall, I still think it looks pretty bullish and pretty strong. We have seen some volatility in recent sessions. Typically, when there are concerns in the market, you do see investors flock to the dollar index as a form of a safe haven. It has underperformed as a safe haven actually over the last week or so. There's been quite a decent degree of interest in things like the euro, in the Swiss franc, and also the Japanese yen. As investors also want to find some value as well, it would seem. So dollar index was trading within this bullish channel, which is highlighted by these yellow bands. We saw a push above the upper end of the channel before a retreat back with inside, and as you can see, some quite large ranges as well. On the 26th of November, we saw a really big move to the downside on the dollar index, and since then prices really have been quite choppy and sideways, so hugging around this kind of 96 level on the dollar index. So fully expect that we could see a retracement all the way back down to the lower end of the channel. I do expect prices to be quite choppy and mixed in the short term, especially while we're trying to find out more information about the new variant of COVID-19. So for now, overall, bias looks bullish on the dollar index, but we could see some volatility and potentially a correction down towards the 94.75 level. On the upside, still looking to target this 97.72 level, which is a 61.8% fib level, and it's also a measured move of this double bottom pattern that we've got here. The first bottom being at the start of the year on the 6th of January earlier this year, then again these lows down in May earlier this year. Projected higher, that comes in at 97.68, and the 61.8% fib comes in at 97.72. So a nice confluence of areas to potentially target there on the upside. If we take a quick look at cable, that continues to grind lower within this bearish channel. We've broken down through some supports of 133.53 and 134.15. No real sign of that changing. We did see some attempt at a pullback here on 30th of November, posting a bit of a hammer type candle, but it didn't really have much follow through to the upside. In fact, closed the session in the red. So looks like lower prices are probably to be expected here. Doesn't seem to be any kind of willing for people to want to own sterling at the moment, certainly against the US dollar anyway. In terms of supports lower down, we've got 38.2 fib at 131.65. That seems to be the kind of natural level that we think prices could correct to in the short term. And until we start seeing some sort of bottoming formations, some impressive kind of candle formations that suggest that a bottom might be in place, then it does look like there is going to be further downside on this. If we take a look at euro US dollar, that has rallied over the last few sessions. Prior to that, it had been really one of the most persistent downtrends in the FX space at the moment. We saw this breakdown through the blue line that we've got on the screen here at 115.25. No real looking back since then. Yes, we've seen a little bit of a pullback here, but the last 3 days have been negative. If you include today, obviously there's a long way to go on today's session. So it looks to have been just a case of looking to sell into rallies with Euro USD. So I am expecting lower prices there. And I'm expecting that down to our target of 110.58. The reason we've got that as a target is because it's the measured move of this large head and shoulders top pattern that we've been talking about for some time on the daily chart for Euro USD. So looking for prices to head down to that level. In terms of the upside, I think we are expecting to see prices capped around about 115.00, maybe up to 115.25. So looks like there'll be more downside here. All in all, that's kind of a major roundup of the FX markets that I've been looking at, and using those to sort of dictate where I'm positioning myself elsewhere in the FX space. As I've mentioned, we've got this non-farm payroll number today at 1:30 ahead of the weekend. So do be careful if you're trading. We are expecting some volatility later today. And until then, guys, I'll be following up with this next week, and trade safe in the meantime. Goodbye.